Hey everybody, it's your boy Chris Hunter here, and I am with the one and only Brian Bunch, also known as Dr. Credit.
Hello,
How's
folks.
it going today, Brian?
Doing pretty good, man. We gotta get the day started here. We get everything rolling out. We got a couple appointments, I guess. So
we've got a couple set. Now, last week we didn't do our Dr. Credit video.
Well, we were pretty busy.
What's been going on here?
Well,
tell everybody what we've been doing.
Man, we have been slammed. We have been helping out a lot of folks, and it's been good. So we are not complaining, but we haven't been able to do a lot of the videos like we had planned on. More so because we've just been busy helping everybody. I think we've helped 10 people since
the first.
Well, yeah, since the first or since last Thursday. I mean, it's been rolling good. So thank you to everybody that's allowed us to work with you. And thank you to everybody who sent those people over for referrals. We've had several referrals, several appointments. Dr. Credit website's doing good. I mean, it's really starting to kick off. I'm excited. Talked to Russell yesterday.
Good.
We had a meeting with Russell, and he is stoked. He's ecstatic about how we're being able to help everybody. So,
well, sounds like we got some great things on the horizon. But for today, why don't we go ahead and begin our third episode of our Ask Dr. Credit show. We'll get started right away.
Okay.
So here's a question that's pretty common. We see it pretty often. How do you build your credit?
well, we get asked that a lot. A lot of times we'll preface that a little bit. How do you build or rebuild?
Sure, yeah.
We get asked that a lot because a lot of times younger folks, they want to know, they get turned down because they haven't established credit. A lot of lenders want several lines of credit to be able to do so. The biggest thing that I would say is revolving credit or loans from your local bank are big ways to do it. So that's probably a number one way to do it. So if you have a good relationship with a local bank, talk to them about getting a small note loan or a signature loan, a line of credit. But the biggest one that really helps everybody is a credit card, revolving credit. Revolving credit is huge in doing so, and there are companies out there that will give you a revolving credit. So
you mentioned revolving credit now. That's obviously one way. Now, if we've worked with a bank previously, say I've had a note loan, wouldn't just extending that loan out do the same thing as revolving credit?
Well, you would think so, but the problem that we see is a lot of times customers go to these local finance companies. We won't, again, name drop because they're out there for a reason. But what ended up happening with note loans, a lot of places, so if you go to a local finance company that's not necessarily a bank, but they're a finance company, paycheck loans and stuff like that, is you'll get that note loan and you will have it for, let's just say it's a 6-month note, but you'll have it for 3 months. Well, they'll call you back and they will ask you to, hey, guess what, you can get that $300, $500 again. But what they do is they shut off that one account and they open up another line. So you end up with all these lines of credit. I mean, I've seen 1-2 pages of note loans where they paid, but their payment schedule has only been 3 or 4 times, which means they've paid 3 or 4 months, and it's been in good standing. But when they shut that account down, you don't show a lender for an auto loan or even a home loan that you've paid in a good amount of times a month or whatever. So that's where revolving comes in. Revolving credit is huge to your credit score. It is a big portion. Auto loans are good, especially if you pay well, but revolving credits are huge. So even if it's a $300 revolving credit card, if you pay on that for 2 years, 3 years, 4 years, it's building value into your credit score. So that's where the difference between revolving credit and note loans come into play. And then, of course, you've got to use them correctly, revolving credit.
So then get a credit card. Is there a rule of thumb on how much to spend? I mean, we're not going to want to max this thing out, right?
No, you definitely don't want to max that. That's always the thing, because if you have it, and you don't want to have all that available balance either, because it goes. So the rule of thumb typically seems to be that 70 to 75% value. So for easy math, if you have a $100 credit limit on a credit card, you want to be able to have an available balance of $70 to $75. So 70 to 75% of that value. But use it wisely. If you travel for, get gas, use it for gas a couple times a month. Pay your payment. Keep that balance good, because that's what's going to drive it. Because we've had a customer in the past here who had really, when we first talked to her, she had a 620 beacon score, which was
Right.
good, which would have given her a good rate. When we finally got down to it and got her the note, she had dropped significantly, but we waited another month and she rose again. So credit scores they're up and down things. So, but if you have that positive credit on that revolving side, that's a huge. So don't max it out. Don't have the full balance. Use it wisely. And if you're just building and your income is right, get a small credit card, $300 limit. And if they call you to bump up the limit, have the wherewithal to do that. Keep it at that 300. Build your scores up. And that'll help you in the long run, which will equate to lower interest rates, lower payments, more car versus payment, so that it'll help you out in the long run.
All right. There you have it, guys. Dr. Credit on how to build
Episode
your credit.
number 3.
Number 3.
We're going to keep it going.
Well,
Chris,
Brian, let's get going. Let's
gotta
keep
get
the
to work.
ball rolling.
Thank you,
Thanks,
folks.
guys.